Hey everyone, in a story we did last week on the Dales Report, we reported that a number of DeFi apps reported over $1.2 billion lost in Q1 alone due to hackers. Staggering number to say the least. So what exactly do a lot of these companies in the industry have to do to change to prevent this from happening again and again? In our latest conversation, we sit down with the CEO of a DeFi company to find out what needs to change and, most importantly, why they're the solution. Find out now in our latest podcast. Hey everyone, welcome to the Dales Report, and happy to be joined with the CEO of Liquid Meta back to the podcast, Jonathan Wiesblatt. Great to have you back on. How are things?
Great, Shad. Great to be here. How you doing, Ben?
Doing well, John. Thanks for coming back to the show.
Yeah, my pleasure. I always love talking to you guys.
Always a pleasure to have you on. Ben, by the way, hello. Hope your week's going well. But obviously we wanted to have you on, John, because there was big news last week. It made mainstream news. I want to begin with the whole hacking concern related to the whole DeFi space, and more specifically the Ronin Network, which made, as I said, mainstream news last week, where $600 million was hacked from their protocol. In a story we did last week, we also outlined that the DeFi space reported a whopping $1.2 billion in lost assets due to hackers in Q1 alone. So I want to begin with all this, Jonathan.
Yeah.
What are companies, I guess, doing right now wrong in the space? And most importantly, how do you prevent from this happening again and again?
So as I say to all of our shareholders and anybody that will listen, investing in DeFi, there's two major concerns. One's regulatory.
Right. Yeah.
The framework hasn't been built yet. It's coming down the pipe. Our company, Liquid Meta, is a publicly traded company. We have a lot of visibility. We have a lot of, we're an open book. We think that'll serve well when it comes to the regulatory framework and how we're going to, interact with it. And then the second real risk factor is security, right? Once those tokens or that capital leaves your wallet and sits on a dApp, it's now exposed to the potential of a theft. Now, companies that are out there that are exposing their wallets to these thefts on these dApps, what they're not doing is what we're doing internally at Liquid Meta. And I don't mean to turn this into a Liquid Meta conversation, but it's very important for your listeners to know what we're doing, and so that they can apply that to any logic across the space if they're investing in the sector. So what we do is we have a very, very detailed risk scorecard where we evaluate thoroughly a number of different criteria. Some of those criteria are who the teams are behind the dApps, the investors behind those dApps, the blockchains that we're going to deploy liquidity to, the liquidity and the liquidity pools that we're supplying our liquidity to, whether or not those dApps and those pools have been audited, who's the auditor, how many times have they been audited, when was the last time that they were audited. So we have a full spectrum of criteria that we evaluate, that we look at before we put $1 onto the application. So that's the way that we do it. In addition to that, we run a very, very diversified liquidity mining strategy whereby we deploy our liquidity across 8 different blockchains today at present. So high quality layer 1 blockchains across very well vetted, very well researched dApps, which include 15 of them is where we're deploying our liquidity today, and across 20 different liquidity pools. So no one liquidity pool, if there was a theft, if there was a hack, if there was a bank run, will permanently impair our balance sheet. So that's the way that we at Liquid Meta are thinking.
So this is clearly not happening across the industry right now. As you walk us through and go in depth as to what you have set up on the back end, is this what's lacking right now overall in the industry?
So the industry is brand new. DeFi in itself is a 4-year-old industry. The pipes are all brand new. So where the last 2 significant hack security breaches have occurred, they haven't occurred on the platforms themselves. They've occurred on the bridges, okay? Now, what a bridge is in DeFi is, Ben, if you wanted to take 100 ETH and you wanted to move it from the Ethereum blockchain to the Solana blockchain, for example, to deploy it onto an exchange there, you would have to use a bridge, a specialized bridge that's built. And so that's where the vulnerabilities exist today. All of this infrastructure, guys, all of this technology, just like in every industry throughout time, it will improve.
Yeah.
Like the railroads get better, they get stronger, they get more robust, they increase them, across different terrain. It's the same thing in modern times, especially with DeFi. They will improve.
Now, circling back to the Ronin Network, John, I know you put out a press release on April 1st, or Liquid Meta did, basically saying that their capital was safe. There was no direct exposure, and that the capital was safe. And we understand that, so that this is the case. So just to close off this sort of conversation, to make sure that there's no more doubt, is your capital safe? And that was a 10% portion of your total capital deployed. Is that money safe? And is it not a concern that that capital has been lost in the hack and you can move forward?
Okay, so let's go back just so that we can be clear to the audience. Liquid Meta's capital, its liquidity, was on a DEX that exists on the Ronin blockchain. Okay, that capital was equal to approximately 10% of our asset value, of our balance sheet, of all of our liquidity deployed. Now, that capital that's on the DEX, which was halted, was safe at the time that we learned about the hack on the bridge. The actual theft occurred on the Ronin Network bridge, where we did not have any formal direct exposure to. However, that capital on the bridge, which was mostly ETH, the token of Ethereum, that was used as collateral to certain exchanges on the Ronin network. So we had an indirect exposure, and we felt as a public company, it was our duty to our shareholders, to our market, to the market, to the industry, which is incredibly nascent at the time, a company that is looking to be the bridge between institutional capital and decentralized finance. We felt that it was our duty to share that we had indirect exposure to this hack, and that we would provide updates to the market as they occurred. Now, we have not provided any formal updates to the market as of yet. However, there was some news that was put out earlier today by Binance. Binance is a lead investor in Sky Mavis. Sky Mavis, by the way, they are the owners of the Ronin network, the Ronin blockchain.
Yeah.
And so Binance has agreed as part of a syndicate with a number of very large global investors to provide $150 million of capital to Sky Mavis. They're investing $150 in order to provide or return a lot of the capital that was stolen from more than a week ago. So although it's not all of the capital that's been returned, if you read the Binance release, and you can find that on the Binance website or on the web somewhere, Binance has suggested that all of the capital that was stolen in the hack will be returned to the Ronin bridge. So the DEX that we have exposure to, it was reopened earlier today. We were able to look at our capital. It is still mining. It is still generating a yield. We are still now generating transaction fees and reward tokens on our capital, and our capital is safe. So I'm very pleased that this has happened. And as the market evolves, as things start to improve, you'll start to see less and less security issues like the ones like these. Now, I want to say one last thing, guys. I'm sorry that I'm going on, but I'm very passionate about this and Liquid Meta's role in the ecosystem. If you go back to what I said at the beginning of our conversation about our risk scorecard, we talked about identifying safe platforms, safe blockchains, backed by good shareholders, strong investors, okay? Good technology with good audits. The DEX that we were supplying this 10% of our capital towards, it met and exceeded all of the risk parameters that we set out internally in Liquid Meta, okay? And that is why we were confident when we put out this news that we were going to hopefully be able to secure the capital that was deployed. So we're doing our best to provide liquidity inside this company in a very safe, methodical, and responsible way.
Well, I'm curious to learn what's the overall consensus when it comes to the institutional investor related to this industry, because you've said like the proper corporate governance that you have in the background. A company like Ronin is returning the money, but as you said, still in the early stages. It appears that this is going to be a very lucrative one for companies like yourselves. They're going to focus on institutional investors. What is their overall consensus of the industry right now?
So there's two things, Chad, that I would say. The institutional investors that we are having conversations with and have had conversations with, they're very curious about DeFi. They're very curious about accessing the yields that you can get exposure to inside DeFi. Yet there's a great amount of fear. I mean, these types of situations, these security breaches, they're really the precipice for this fear. You can't argue it away. It exists. It's real. But therein lies the opportunity for an institutional investor that's looking to allocate any of their capital into DeFi to take advantage of these disproportionately higher rates of returns, higher yields, to do so with some expertise. And that goes to the Meta bridge that we are building. It goes to all of the technology and the software and the people and the skill sets that are being developed and built inside Liquid Meta. So what Liquid Meta wants to become, again, we hear this term a lot. We hear the term bridge, but we, in essence, really do want to be the bridge between institutional investors that are curious, that want to do this in as safe a way as possible, with a company holding their hands that can identify risk, that can work to help avoid risk, not always, but work to avoid risk, and do it in a very thoughtful way, and build technology and tools that are going to be able to enhance the ability to do it safely and securely. And that's what Liquid Meta is.
Now,
Ben, do you want to say something?
Yeah, I wanted to now sort of focus the attention to sort of a macro view. And I know on the previous program you mentioned that growth in DeFi would continue, despite some of the challenges faced in the macro economy. And if we look at the chart of TVL across all these protocols in DeFi, it is now approaching its high. It's not quite there yet, but it's at around 231 billion and approaching its previous high, which was around 270 billion last November. So I want to get your take about whether you are impressed by the resilience of what DeFi is showing in the face of such market volatility, and with DeFi being, of course, like the ultimate risk asset, in terms of asset classes go out there.
Good point.
So Ben, just to correct you, I don't mean to correct you on the show, but we're now at around 250, so we're almost back to the 270 high water mark. And then if you factor in the asset erosion that occurred in January and February, the capital that has come back in has more than compensated for the loss of capital through a market sell-off, right? So the interest level, the adoption rates, the curve has really steepened in the last 2-3 months. And the reason why adoption rates are increasing is because the infrastructure is improving, the technology is improving, the products and the services and all of the offerings that are open to investors, to consumers, to all interested parties globally, they're just getting more robust and they're just getting more diverse. I mean, there's insurance products, there's lending products, there's staking products. I mean, it's as a DeFi company, as a CEO of a DeFi company, the founder of this company, it is almost impossible for me alone to follow all of the adoption, all of the new stuff going on. So that's really what's driving the macro right now.
Yeah, I will say when we look at the times we're in right now, it's very difficult to obviously raise money. Yet you guys are in a very good position. You're basically, when I looked at, funded for the next 10 years with 10 years. That's incredible. With existing capital at hand, and this appears obviously to be an advantageous one. So I want to ask, when we look at this space right now, like how much of an opportunity does that present to you and your future being fully capitalized, and why that's important for investors to understand?
Right. So, I mean, the opportunity is, in my view, it's right now it's a $250 billion opportunity on its way to $1 trillion opportunity, total market, right? And Liquid Meta has a balance sheet of, as of our most recent quarter, it had $2 million on balance sheet. It raised 20, so let's call it $22 million on balance sheet today, based on the information that's been provided in the public domain in the past. So we're a speck of sand on a very, very large beach right now. The opportunity is massive, and that's why we're chasing it. So when you say we're fully capitalized, you are right. For the next 10 years, that's an interesting number that you throw out. Based on our current burn rate, that number is accurate. I've got it between an operating expense burn rate of 2 to 3 million. So 2.5 would give us a very, very long run rate of burn. Plus, our business generates revenue and good cash, mostly over a consistent period of time. So we're self-funding right now. And so, I mean, we can fund our growth. We can hire, we can build, we can develop the Meta Bridge, we can continue to add new services, we continue to think about new products, new opportunities, potential M&A, and we don't necessarily have to look at raising more capital. If you look at emerging industries, all of them, most young startup emerging businesses, they're always in capital raising mode. We are fortunate that we don't have to be.
Yeah, and that must be a tremendous advantage, as Shad pointed out, because if you look at industries like psychedelics or junior mining, for example, obviously not the same industry that you're in, but it's always a cycle of, you're funded for 2 or 3 quarters, and then you're raising, and you're funded for the next 2 or 3 quarters to build your resource, for example, and then you're raising again. But you're not really subject to any of that, at least in terms of your current business plan. So that should definitely be attractive to investors, knowing that they're not going to be diluted to death, right? They can, if they want to stake a position, then chances are your runway is like 3, 5, or 10 years, as you mentioned, right? Without having to destroy the capital structure.
Exactly. So we have no debt on our balance sheet. Management, insiders, and founders own upwards of 60% of this company. So they really care about, growing the equity value responsibly and managing the treasury, right? So like you said, Ben, unlike certain other industries like junior mining or cannabis or capital intensive businesses, we don't have to worry about always being in capital raising mode. Would we like to grow fast? Yes, but we can do it responsibly and within the confines of our existing, business model as it stands today. So we don't need to create a massive amount of dilution to grow the company.
How do you see the industry performing for the rest of this year? We are in uncertain times, but we do definitely have huge growth on the horizon with this industry. It's a tricky one. I think a lot of investors would like to know, being a CEO in the space.
Shad, I'm biased to the upside for the industry. Clearly, I left a prior career in a different industry to go and I founded this business. I'm running this company day to day. So clearly, I'm very bullish. I'm bullish over the next 10 years, incredibly bullish. However, looking at the industry over like the next 12 months, I'm pretty agnostic to whether the industry goes up or goes down, given the macro backdrop right now, because our business, as we've discussed in the past, it's an all-weather DeFi business model. We are going to generate revenues and hopefully make money when markets go up and markets go down. We are we're a very diversified business. We actively hedge all of our exposure to these layer 1 volatile tokens where we have them. All we want to do is extract the value from the liquidity pools that we can find in DeFi. And again, just to highlight, all of the liquidity pools that we're deploying our liquidity to are put through a very stringent list of risk parameters and criteria that we have developed internally before we deploy $1 of capital. So
good to know. Last thing I wanted to ask you, and it makes sense. When you look at the growth of this industry, you're going to have competitors that are obviously going to enter into the space. And I think anybody would like to know, what are the advantages that you have being an early adopter within the space? And obviously things that come to mind is like, prove to me and show me how exactly it works. And you obviously have examples as to what you can share. In addition to that, you're building out relationships. Is there anything you want to add to that as to what the importance is of being an early adopter versus, say, competitors that enter in the space later on down the road?
Yeah, so our founders at Liquid Meta are some of the most sophisticated and successful crypto DeFi gaming entrepreneurs on a global scale. The access and networks to professionals that they have at their disposal and the ability to hire those people and build intellectual capital within our company are second to none at Liquid Meta. So our company has been adding an incredible amount of talent. We just added a new CTO. This individual,
and that's not easy to find, especially in a brand new. Like, I can't imagine what you have to go through in a new emerging industry. And I can't imagine hiring probably anyone over the age of 35 when it comes to a lot of this stuff. I could be wrong.
He had a financial services focus too, correct?
Correct. So Daniel Opperman, our new CTO, we hired him, at the beginning of March. He comes from financial services. He worked at Goldman Sachs, responsible for building some of their, internal options hedging strategies many years ago, a very well-known platform that was used internally, and has been working in crypto with stable coins and a lot of the things that we're doing here at Liquid Meta. And he's somewhat of a more mature CTO. So he brings, a mentality like the rest of my founding group who are in the same age demographic.
Yeah.
So we have found somebody who's older than 35, who's mature and very, very reliable and incredibly intelligent. Daniel has a mathematics background, and DeFi it's really one big mathematics experiment. And so he brings, a layer of that to the business, which we didn't have. Daniel's also incredibly networked in the software industry, and is working his channels to add more talent to our organization. So new CTO. In addition to that, we have senior software developers, research and trading expertise, DeFi research and trading expertise, crypto expertise, and traditional financial services expertise in myself. So we put all that together, and that is really what the competitive advantage is for Liquid Meta.
Yeah.
It's our ability to procure talent and to build software and tools that are going to allow us to offer, a unique way to gain exposure if you're an institutional investor. So that's a lot of buzzwords, but Liquid Meta is truly building, really, really interesting products that are, first being used on our own balance sheet, and we'll be able to offer them out to third parties as the business matures.
Well, it's conversations like this as we continue to talk to you more and more and just learning this space. It's grown so fast, but at the same time, too, maybe a little too fast for people to understand. But you mentioned Goldman Sachs, too. They got a little hip over the weekend. $4.2 billion they bought out liquidity. Crazy how the financial system is changing drastically. You guys trade on the New York Exchange under the ticker symbol LIQD. John, appreciate the time.
Anytime, guys. Looking forward to coming back.
All right, keep in touch.
Thanks, John.
Hey, everyone. Thanks for watching. We appreciate you giving this video a thumbs up. We also value your feedback, so leave a comment below. And if you like what we do, then share this video on your socials. And don't forget to subscribe to our YouTube channel and tap on that bell to receive notifications for all future videos that we post. Thanks for watching.